Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're looking at US industrials and my guest is John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. US industrials, often overlooked by investors seeking the thrills of tech, have almost tripled in value since the early days of the COVID pandemic, and in a major bounce over the past 2 to 3 months are up around 9 to 10%, outperforming the S&P 500 during that time by a factor of 2 or so. So could this be a major turning point for a sector which includes some hallowed names like Caterpillar and Boeing, but also some newer ones like Uber? Its fans say yes, the US economy is growing and interest rates are more benign in feel, if not in actual fact. Its detractors say beware, this is an asset-intensive sector that requires large amounts of investment to thrive, while margins can be low. Well, with me is Oppenheimer Asset Management's John Stolfus. John, welcome to Sectors Up Close. First question, is this recent bounce all down to the outlook for US interest rates?
I don't think so, David. I think in part it is. I think the upward lift that we saw from the end of October through the end of the year and the beginning of this year really has been about the fact that the Fed is getting it right. And I think that, and also the resilience in the consumer, in business, and overall economic resilience that includes labor. So as a result of that, I think that's where the real impetus for that gain came from. However, that said, I think another portion of it was most certainly coming from traders and fast money players who are looking for upside coming from more cuts than the Fed actually said it was thinking of.
Now, industrials, of course, it's quite a diverse sector covering aerospace, industrial conglomerates, equipment makers, transportation, and so on. Should investors look for pockets of value there, or should they go for the big names?
We would think a good way for most investors to consider investing in the industrials is on both the cyclical or near-term economic theme considerations of what's happening in the US, the big investment, hopefully likely to really begin in earnest this year after all that money was assigned to it, to see infrastructure spend in the United States, building of plants and all types of developments necessary around that type of program. And that should be good for the industrials.
And in terms of the prospects of subsectors within industrials, you mentioned there green energy and infrastructure spending. So how healthy is the outlook for equipment makers, for example, like Caterpillar?
These are trends that are very much coming to the fore in investors' mind and in the mind of governments and their constituencies in the need for improved and more efficient production of agriculture. And then in terms of construction, there's great needs for housing, there's as well as within the infrastructure. And all this requires stuff like backhoes and graders and bulldozers and stuff like that, and tractors and combines and other farm equipment. And all of this today with technology, it's the latest and the greatest, and not just from a fun perspective, but from a perspective of efficiencies that are needed.
Now, the other big component of industrials is aerospace and defense, both subsectors which have had their recent issues with equipment failures and some doubts over government spending, US government spending on, for example, armaments for Ukraine. What do you see as the outlook for that subsector?
Well, I think the outlook for this is the problems that exist, for instance, related to safety surrounding one company in particular are likely to be addressed rather quickly here. It has been something that has been troubling that company for a while regarding some of their aircraft. And we would have to think that there's no other choice but to address it and get it fixed. And related to defense, the geopolitical risk, whether it's in the Middle East or whether it's in Ukraine, the geopolitical risk is significant, and the whether you call them frenemies or enemies, the issues call for increased production of military equipment at this point, if anything, to get people to the table to negotiate some kind of agreements like we used to have in the 1950s, the 60s, and the 70s, etc.
All right, John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. Many thanks for sharing your thoughts today. And that is your roundup of US industrials. I'm David Pollard, and this is Reuters.